Okay, everyone, welcome to my daily review. Thanks for checking in here. You're looking at a daily chart of the Nasdaq, which has been in a power trend, strong rally throughout 2023. It pulled back to its 21 EMA here in June. We'll get the exact date for you here. Yeah, June 24th, 26th. Okay. So now we're in August. It rallied back up to a new high of 14,446. And now since we've hit August here, this is August 1, this is August 2, this is August 3. So with the calendar change in the month, there's been some selling, and we don't need an excuse for people to take profits. I mean, the Abercrombie and Fitch downgrade, people want to make a bunch of noise about that. It's just profit taking, and there's a lot of profits to be had. And what areas have been hit the hardest is semiconductor and software, because that's where the profits are. And so the Nasdaq contains a lot of those stocks. And what you want to see is this selling abate a little bit. But we're seeing, an increase in volume here. So I just want to point out that a pullback to the 50 here is about 2%, 2.3, but this is a rising 50. Okay, it's going up about 50 points a day. So if this thing just traded sideways, this moving average is going to catch up to it pretty quickly. And if it trades down, I mean, it was down 2% yesterday. So it made another move like yesterday, it would already be down to its 50. And coming down to the 50 is totally normal. You have to proceed with caution, though, because we don't know how long this sell-off is going to last, and we don't know how far it will go. It doesn't have to stop at the 50. It may get there, it may not. It may slice it, it may not. But we just take things one day at a time. Just proceed with a little more caution. You're going to find that most of your recent trades will be underwater as the market corrects, because 80% of stocks are going to follow the index, which makes it a little tougher sledding. But if you bought, back in here, in April, May, and June, I mean, your stocks have ramped quite a bit, and you have quite a bit of cushion. Anyway, let's get to some stocks here, because I really don't trade the index. I just trade stocks. And I'm only interested in stocks, although, like I said, 80% of stocks follow the index. This is Meta, which has traded down to its 10. Last week or the week before, it traded down to its, the last week in July, traded down to its 21, then jumped, and now it's traded back down to its 10. The last couple of sessions just kind of squatting there, doing nothing wrong. Any stock above the 10 looks fine to me. NVDA is another one. A little more concerned about this one because it sliced its 21 here, and now today it just closed just slightly below it. I'd like to see it power back through above these moving averages. It has this ascending base pattern, and it made a new low, so that is definitely not a good sign. Microsoft is another one that worries me because it sliced its 50, and we need to see that one get back above its 50 real soon and start showing some strength. It's up after hours on that Amazon report with the AWS news doing well. So Tesla down to the 50, got a little bit of a bounce, 2% on lighter volume. We need to see a move back through these moving averages with some power, and I'm not sure it's going to do it. We just got to take it one day at a time. Another stock that I need to talk about is Palo Alto Networks, getting clobbered in after hours. You can see it's down to 222, which is going to slice this 50 tomorrow. It's down in sympathy with the Fortinet earnings report, which was missed on revenues, missed on earnings, lowered forward guidance, lowered their billings expectations. Fortinet had the grand slam of failure here. This one's really going to get smacked tomorrow. It's down to 17%. And so I could see, maybe some firms are lightening up on their cybersecurity line items and pushing more money over towards the machine learning. That would not surprise me. And data centers is what Lisa Su told us yesterday, or whatever day was, Tuesday, in their report, which is good. The PC is rebounding, and that's kind of what Apple said this afternoon. I'm going to get to that a little later on. Anyway, I'm going to go through some stocks that we normally don't cover here because they're performing well, and this is just kind of a rotation once again into this is your medical drug supply stock, ABC. We learned that song early in our childhood. A, B, C, D, E, F, G. And this one traded down to its 50 for the first time since breaking out of a base, right? It had this big move higher, pull back to the 50 and bounce. And that's what I want to see Tesla do, have a big bounce like this. ABC's already done it. We'll see if Tesla can. Palo Alto certainly is not. This McKesson is another one, this medical drug supplier. They reported earnings, but you can see it broke out of a base, returned to 50 for the first time, then bounced higher. And that's the kind of move you want to see, a nice 5% move with big volume. And I'm not sure we're going to get that with Tesla, but these stocks look good to me. And not too far away from buy points. Here's Cardinal Health, again, just showing strength in today's week tape. So money definitely flowing there to that sector. Another sector is getting some love is the oil and gas field services. This is Tidewater making a new high today. I'm gonna have to put this one back on our leading stock list. This is my favorite stock in this space, and it's getting cut. It's getting a little bit ahead of itself. I mean, if that was me, I'd be selling it, but you could do what you want if you own a Tidewater. This thing is really showing a lot of strength, and definitely money is flowing there. Another one I like in this sector, it's an equipment stock, not field services, but Weatherford. And this one is just grinding higher, showing strength in a week tape. And that's what you want to see. That's what I look for on these, weekdays. As I turned August, we've seen weakness in selling. And so I just want to see stocks holding their gains and just kind of holding above their moving averages. And that's what Baker Hughes is doing. Just a slower mover here, but showing strength in the week tape. Those are some of the oil and gas stocks but I have to talk about the retail. First of all, I love retail because for me, it's easy to follow. And I like to get out to the malls and, just people watch and see what people are buying and see what the trends are. And Wayfair, this is like an internet, so you really can't see it. It's kind of like a home furnishings. And this one just blasted higher, more than 16% on a 372% above average daily volume. So a move like that is not going to be ignored. Dick's, this is a well-run retailer, and I kind of like this here. This should be on our watch list here at 140.60. You can see it's just holding right here. It had this 138, 140, right there at 140. Looks good. Now broke above it today, 145. A nice 4% gain for Dick's Sporting Goods. That looks good to me. RH, this is kind of like in the need an R in there, buddy. This is in the same space as like Wayfair, your retail home furnishings. Very much you got to go to the weekly here because you can see this, this consolidation, then a base, and now blasting out of this base and up for the last 4 weeks. So definitely money flowing and rotating into these stocks as well. Lululemon, this has been on our watch list. It's taken its time. You can see it's just kind of trading sideways above its moving averages today. So I like it better above the moving averages. Nice 2% move today. Not connected with AI, but still doing well. Boot, this is one that I've been watching and I love the chart pattern and I just blew it. I missed it, completely whiffed on it. But I wouldn't have bought it ahead of earnings anyway. But it did trade down to its 21, which kind of like shook everybody out. And today blasted 13% higher. I shouldn't say shook everybody up because somebody owns the darn stock. But this is designed to just shake out weak hands. Recent buyers can't afford to hold through earnings, and it just popped higher. So congrats. Oh, Ethan Allen, which is not normally a stock that moves 16% in a day, but this is coming out of this nice long consolidation pattern. You can see that base here, couple days of selling, shaking the weekends out, and today it baked 16% higher and 300% above average daily volume. That is a move that not to be ignored. So I like that move. And there's just a lot of retail stocks that did well today. But I'm going to move on to an area that I never cover, but I like, and that's the HVAC, and it stands to reason with the, all the new home building going on and government spending on the infrastructure that these stocks are doing well. This is Modine. up 13%, nearly 200% above average daily volume. And that is a move that's not to be ignored either. I would like to see it close higher in the daily range. People ask, what do I look for in a gap higher? I look for a stock that goes up more than 10% on more than 100% above average daily volume. So this one will be monitored, much like VERT and ELF yesterday. So this one definitely is one to watch. What else was I going to look at in this? Oh, FIX. This is my favorite one in this group. Nobody talks about it. Super quiet stock. Broke out of a base, pulled back to the 50 for the first time, and voila, went higher, right? And that's what you want to see. So there, I've got a couple stocks here that have pulled back to the 50 that just have not done what I had hoped or what I expected. AAON, they reported tonight and completely flat. Anyway, this chart looks pretty good to me. Pull back to the 10 today, a 2% move down while the others were moving higher. And Carrier is another strong one in this group. This is a spinoff from United Technologies, and you can see that it was in this consolidation period and has broken out and really showing strength here. So that's it for the HVAC. Oh, there's one stock that I did want to show. I was talking about the 50, and this is Celsius here, which is pulled back to its 50. It sliced it yesterday, and now, it's right at the 50. It closed, 0.1% above it. So it's squatting on its 50 here. I think they're going to report good earnings, but you have to have at least a 15% cushion to hold the stock in earnings. Why is that? Because I'm going to share with you my formula for holding stocks into earnings. I take the stock's worst day in the past year, and this is a 10% loss on January 18th. So I take that 10% and add my 5% stop loss. So I need 15% cushion just to hold this stock into earnings. Okay, so that'd be about you'd have to buy it about 122, right about where it where is it here? So 143. Yeah, it'd have to be a little below 122. So you have to buy it before this last earnings gap. But it's tough, to hold this stock while it's going sideways and the rest of the market's ramping. It's been 3 months now. You have to hold it into earnings and hope that the stock responds well to a good report. You never know. That is a coin flip, and we've seen a lot of stocks blowing up after earnings, and so it's just too much risk. You got to manage risk in these earnings reports. And that's it for today, except I want to honor the great Steve Jobs and Apple earnings after the bell today. It's down now more than 1%. Okay, 188. They reported a strong quarter. You never know how the stock's going to react. This one is likely to be, I don't know, it's going to be supported at some point. It's below the 21, so the 50 is 186.88. Tomorrow it'll be about 187, above 187. So I wouldn't be surprised to see it trade down to the 50 and then find support. There's just a lot of buyers and owners of Apple. One thing about the report and that we're seeing, and that the PC market is rebounding, and their iPhone sales were a little light because they're coming in with a new iPhone 15 or whatever. So people are going to wait to buy the next iteration of the iPhone. I know at least I am. So if I am, that means everybody is, right? Anyway, that's it for today. Don't sweat, the correction in the Nasdaq. These are healthy. We need to embrace them. Watch for strong stocks in this week tape. Stocks that are holding up, above their moving averages. I doubt if the selling is over. I'd just like to see it go sideways, though. Nice, if it just wants to go down 13 points, that's great. There's always going to be stocks that are going to be performing well, but don't sweat it. We're in a strong uptrend. We need these pullbacks from time to time to relieve some of this pressure and some of the froth in the market. So, August and September is seasonably weak, and seasonality is a thing that people will say it's just a bunch of BS. But if you're looking at your portfolio, it doesn't look like BS to me. It looks like there's some real profit taking here and some selling. So be respectful of the downside and preserve capital and practice risk management. And like I say, your most recent buys are likely going to be underwater with the index, selling off now. Anyway, embrace the pullback, look for opportunities, and never give up.